Hey, welcome back. It's Nolan Mathias from Mortgage 360, and today I'm going to discuss why I think people should be taking a break from the real estate market. And in this video, I'm going to discuss who I think should be taking a break from the market, who shouldn't, what criteria you should be using if you're looking at buying investment properties, and all sorts of other things with respect to what's happening in the market itself. But before we get into it, do me that favor, hit that subscribe button, hit that notification bell, and please hit that like button so more people like you can see this video. And don't forget about our race to 25,000 subscribers, where when we hit 25,000 subscribers, we're going to give away $5,000 to put into somebody's TFSA or RRSP just for subscribing to this channel. So go ahead, click that subscribe button. It's free, it's easy, and it's definitely worth it. The definitive guide on how to manage your credit: product, penalty, price, in that order. It's never been more important to get your mortgage right. Okay, so let's get into it and let's discuss why I think people should be taking a break from the real estate market. And this is going to be kind of a broad conversation about different things that are happening. It applies to first-time homebuyers, it applies to people who are purchasing, who already own a home, and it applies to real estate investors. And I'm going to start by jumping right in here and talking about a few things with respect to the news. And we'll start right away with the US Fed keeping rates near zero, but strengthening their view of the economy in the same way in which the Bank of Canada did at their most recent meeting. So what this means is that it looks like things are getting better. However, it doesn't necessarily mean that they are getting good enough for the US Federal Reserve to draw back their quantitative easing and ultimately move towards a step towards at least increasing interest rates. Now, we've also got at the same time this article, which talks about the loonie and what's happening today. And now the loonie has hit its highest level since 2018, and it's because of the diverging rate expectations that are happening between the US and Canada. So we've talked about this in previous videos. We have talked about the fact that if Canada hikes their rates first, it's basically going to create a scenario where our dollar gets stronger, and when our dollar gets stronger, that means our exports get more expensive, and that ultimately has an effect on the economy, which could lead to us having to ease the expectations with respect to rising rates again. So we've got this really interesting situation playing out where just on the forecast, just on the beliefs that interest rates may be hiked at some point in the future and sooner than what's happening in the US, that therefore our dollar is higher, which basically puts pressure on those rates not to be hiked as fast as we would expect. Because what will happen is, like I said, those export goods are going to get more expensive. That's going to put pressure on our economy, and we could be revising things back to a longer period of low rates again very soon. But here's the bigger issue, and here is the big news in the real estate market, the thing that everybody is talking about, and that's with respect to blind bid offers and the rules and the way in which realtors are acting. And for the most part, most realtors, almost all realtors, are going to act in an honest and fair fashion. I don't care what you think about any industry. Most people are good people at heart. Very few people are bad people, but every once in a while you're going to find a few bad apples. And what's interesting is you see articles like this coming out this week where in Hamilton, bad things are happening in Ontario real estate market as homebuyers complaints surge. And what has happened is basically homebuyers complaints have gone up by, I believe it is 38% this year. And that's to be expected, right? Because when you have more people entering the market, you're obviously going to have more complaints. And what's interesting is that the complaint here is that a realtor disclosed that what the selling price was or what the bid prices were on a particular property. So this couple has filed a complaint with the Ontario real estate regulator, and they have basically said, it is unfair that the offers were disclosed because somebody who had won that bid was no longer able to win that bid because the realtor basically disclosed in order to bid the price up. So wait, hold on a second here. We've got people wanting blind bidding to go away because they think that it's not fair. But then when you look at the complaints on the other side of the news, we've got people who are losing out on properties because the realtors aren't honoring the blind bid system. Because what's happening is when the realtors are basically going out and saying that here's the bid, you have to be higher, well, that's bidding up the price even further than it was already bid up. It's not having the effect that people think it would have, which is if it was an open system, the prices would remain low. It is having the opposite effect. It basically having an open system of bidding and having those bids disclosed pushes the price up even further. And if you want a good example of this, look at what happens at the Barrett-Jackson auction every year. In a live auction scenario, you've got cars being sold for significantly more than they would be in any other environment. And that's because you've got a whole bunch of qualified bidders all in the same room. They can see what everyone else is bidding, and it's a game of who taps out first rather than a game of just saying, what's your best bid? So we've got all this news, we've got all these things happening. And the reality of it is it's crazy in certain markets out there. Like my understanding is in Ontario and in Vancouver, it is pretty much impossible to buy a house right now without having a condition-free offer. And if you have a condition-free offer, you're putting yourself at risk. And if you're putting yourself at risk, you may not be able to get the mortgage. You may not be able to close on that property. And on top of all that, you're in a blind bidding situation, and the house prices are getting bid up way beyond what they should be in most fair and honest markets. So, and I don't mean fair and honest markets, to be clear here. I mean in most normal markets. So, I think what that puts in perspective is it puts into perspective that there's just clearly some people that should be staying out of the market instead of jumping in because the housing market's hot and you think that housing prices are going to go through the roof and therefore you have to get in now. What you need to understand is that markets go up and markets go down. And most of the time when we see big run-ups in prices, we see them come down again for at least a few years afterwards, and we see things flattening out. So what you need to understand if you are in the market for a house right now is that if you've got the ability to wait, you probably should, because there's a good chance that, yeah, you might pay a little bit more for a house if you wait. However, buying in markets where things are absolutely crazy and you're bidding against 40 other people is just not a good idea unless you absolutely have to do it. And if more people stepped out of the market when they didn't have to be in the market in a market like this, well, the craziness wouldn't quite be there. So here's my beliefs with respect to whether or not you should be buying right now. If you're in a market like Calgary where, yes, things are hot, but you can still buy a house with a financing condition, go ahead, get into the market. It's a normal market. If you're in places like Saskatchewan, Manitoba, different areas of the country where things aren't absolutely bonkers, then go ahead, get into the market. But if you're in a market where, you're going to have to bid against 40 other people to buy a house, there's a pretty good chance you don't want that house unless you absolutely need it. So if you're a first-time homebuyer in those markets and you can stay out of the market, my recommendation is you try to at least stay out of the market until things cool off, and they will. It's very rare that we see a Christmas season where you've got competing offers. So by the fall, by Christmas, there's a good chance you're going to be able to buy a house without being in this craziness. The other thing I recommend is if you're looking at selling a house to upgrade, you wait and think until things cool down a little bit as well, because the last thing you want to do is put yourself in a situation where you have sold your house, you've got a huge amount of offers on it, and you've sold it for way more than it's worth, and then you have to enter that bidding war system and pay way more for an even bigger house. And one thing people don't realize is that it is better to upgrade your house in a down market than it is in an up market. So, you definitely don't want to be upgrading your home in a market that's absolutely crazy. Now, the third type of people that need to consider whether they should be in the market or be taking a break from the market right now are investors. And there's a really simple rule of thumb for investors on whether or not you should be buying into a market or not. And that is whether or not the property cash flows when you buy it. If your property is break even or better when you buy it, then it makes sense to purchase it. But if you are purchasing revenue properties and you can't break even or better on it, then you definitely shouldn't be entering the market. So, really simple advice for people is first-time homebuyers, if you don't absolutely need to buy a house right now and your market is absolutely crazy, stay out of it. Don't get into bidding wars. If you're in a place, where you have a home and you don't necessarily need to be moving right now, I'd try to stay out of the market as well. And if you are a real estate investor, it's really quite a simple proposition. It is, if the property isn't break even or better, just don't buy it. And for the most part, I can pretty much assure you that if you stay out of a crazy market, you're going to have a lot less stress. You may end up paying a little bit more for the house, but here's the thing, 25 to 30 years from now, whether you buy at the top of this market or whether you buy when it cools down, the top of the market's just going to be a blip on the radar, no matter what. 30 years down the road, top, bottom of the market doesn't really matter. So, I think one thing that I'll add to the end of this conversation is a lot of people are looking at the market from a short-term perspective right now. They're looking at 6 months to a year. When you're making your purchasing decisions, you really need to be thinking long-term, 10, 15, 25 years down the road. And when you start thinking about your purchases in those terms and whether you can hold out a year or two to purchase a property when things aren't super crazy, I think that will drastically change your perspective, because you have to remember, real estate is an illiquid asset. It is not a liquid asset. And therefore, it is something that you need to think about long-term, not short-term, when you're making your buying and selling decisions. So if you found this video useful, I've got a few more things for you. First and foremost, if you are getting into the market, we've got our secrets to getting the lowest interest rate course that is available. There's a discount code in the description below for 50% off the already discounted price. The first-time homebuyers course has started. I'm going to leave it open for 1 or 2 more days. I probably shouldn't, but if you want to sign up for that course, by all means, link in the description below. And if you found this video useful, do me that favor, hit the subscribe button, hit that notification bell. Please hit that like button so more people like you can see this video. And don't forget about our race to 25,000 subscribers. We'll see you on the next video. Cheers.